Okay, you guys, I am back. Now, let's look at something here. It's it's today. Today is today. Today is today. I'm going psychotic. Okay, sorry. Let me just stalling, you guys. Just stalling. Okay, so let's pop this up here just in case anyone wants to talk. Um, I know some of you might just do the video later. Let's see. Actually, I was going to walk around and do this, but I just feel like I should have walk around and do this. One of these days might be right. You see videos people walking around and do just talk. That might be a good place to go. Hey, what's up, Kika? How are you? And welcome. A break from the riots going on here. What? There's a riots on GameStop? You mean figuratively or literally? Right. Okay, so let's talk about. Of course, the main topic is always about GameStop, but I would love the whole market at large, right? There's a lot of fear, uncertainty, and doubt in the market, the whole grand scheme of things. So let's talk about that as well. And I want to kind of point out the bond market as well. We'll see. In UK, oh my God, what's happening over there? I've been kind of living under the rock lately. I haven't been even looking at any news. So what happened over there? If you don't mind sharing with me here. Um, Man, is it like major events here? I've been kind of like focusing on the stock market at large. I know there's like some news about Iran and all that stuff. Uh, Third World War perhaps is going to happen. Um, I don't know. Like there's a lot of uncertainty, and I'm sure this is what is being played out in the market as well. So you always know, right? When there's some big events happening, the stock's always sneaking, sneaking in ways to crash of some sort. But yeah, so while Giga is typing or not, I don't know. But hopefully everybody is staying safe. If that's the case, yeah, it's probably high cost of living, if I have to guess. I know European inflation went pretty high in terms of high cost of living and all that stuff. Maybe hyperinflation of some sort, like Venezuela, for example. Because like the government all around the world are printing like crazy, right? When I say money printing, it just means that they are forgiving themselves the debt that they are owed to each other, and eventually, somebody has to pay for it. Um, Oftentimes, people glorify debt, and this is the whole point as well that I'm gonna talk a little bit about that because it's important to all of the big caps out there that I think. Okay, so our PM started a very serious culture. Oh. Um, hmm, I don't know how I feel about that. So it's almost like a civil war of some sort. Like, is it a class warfare? Is it a? I need to stay informed in the other global. It's like I feel so inadequate in making this discussion right now because man, if that's the case, it's not a good thing. I hope people are staying safe out there. I feel like in America as well, there's a lot of division. There's a lot of kind of like anger as well, right? We are being bombarded with all of this crap almost, right? The jobs, no prospect of making it work here, it seems like, and high cost of living and all that stuff makes people very depressed. Like you see a lot of um, video out there. It's like how can I make it work? How can I would not envy any people who are trying to fight against the system. In a sense, like in a way, investing in GME is kind of a form of fighting against the system too, in my opinion. But change to oh, am I not online? How do I do that? You only have top chart. Oh, shoot. Oh, that's why people are not. That's why I was like, how come nobody's commenting? That's so okay. Thank you so much, Giga. I just learned something new right now. I appreciate you. Okay, so our VP said he's protecting Muslim country. Oh my God. Now we have a. Oh, okay. VP. Man. Oh God, it's hard to hear. Anytime I hear stuff like this, like even the Gaza and all that stuff too, it's heartbroken. Nobody has to gone through all of that just because of these. I know, like I have somebody who's personally to in my personal life who is near to my heart that feel some sort of way about Muslim in the culture, how violent and all that stuff. But again, like to me, I don't know. I think it's being stirred as well, and so I'm very my heart go to everyone that has to deal with all of this. I know, yeah, like peaceful people of all walks of life, in my opinion, only want one thing: happiness, right? Pursuit of happiness and safe environment to live in. And so to pin one group among each other is not worth it at all. But um, you know, to me, I just feel like sometimes it's all false flag events, right? It seems like just to cast the chaos in the street so that we don't think about what is most important to our lives, which is, um, I don't know. It's hard to say. It's like, oh, protect yourself and all that stuff, and this is how you should protect yourself, and that's why I was only focusing on the stock market in general, because I know something big is happening too, but also you run the risk of like, oh, you don't care about anything else but the stock market, right? But again, this is how you could protect yourself and give yourself the option to move out of any city if it's um, if it's really bad. And so, man, definitely being stirred. Yeah, this is every city at the same time. Oh man. Oh, again, like to me, again, it seems like there's a lot of distraction, like to distract people from the real problem. Uh, oh man, I hope you guys are staying safe. You and your family, all of them. But yeah, thank you for mentioning that news. And my heart goes to everyone who's affected by this. Like, it's not a fun thing to ever talk about, but it's important to mention too that we need to stay level-headed, and not being stirred to react to certain things, and even arguments about anything at all. Um, you know, to have this type of violence, and the news of some young girls being killed too, stabbed. Oof. Um, man, if it's really true, that is sad. Um, sometimes too, I don't know if the news is being, uh, those type of news are correct. Sometimes, people just react to the news because if you hear, like, hey, Muslim illegal immigrants stabbed and killed, it's like, the emotional response that you have, it would shake anyone, you know, who read that and then like what? and and so that's elicit something, right? They're trying to elicit something in you to go after certain people. And it's being done over and over again. And again, I'm not saying that it's not happening because I'm not aware of what is on the ground is, or what is happening on the ground. But I just feel like sometimes those news might not be the true news of events. Um, and so it's being placed into, the public for a reason. So to cause the riot, to cause some chaos in the world or in that region, to distract you from something is more important. So that's just my point of view here. Even in the US too, right? With the whole assassination thing that happens, and sorry, don't mean to go or anything. It's ridiculous for me to even think about what is happening, and people keep saying, oh, it's not a true thing, it's planned and all that stuff. And like, I don't know how people could plan those type of thing. I mean, you see it right in front of your eyes, the guys being shot at, and again, the narrative is going to be spinning, all around. So just stay safe out there, you guys. You got, like I said, I'm happy to hear that you are safe. I hold TME. I'm not going out. True. I know. Like sometimes, like I feel like I have no life outside of GME, right? And actually, somebody close to my heart also said that too. And they're just like, man, like of course I have some life here, but I'm just hyper focused on this one right now. So, okay. Be safe. Okay. This is citizen. Okay, journalist. I know what you're saying, but this is okay. Okay. Update all the time. Mainstream, certain. Okay. Thank you, Jesus. It's mad. I haven't seen anything like that. Man. If anyone ever been in UK, it's all changed in a week. Wow. No, no, not at all. Like, I appreciate you, sharing all of that news, and it's, it's better to stay informed. So I'm glad you do that. So it's important, to share those type of thing. And, certain sentiment is going to be illicit in this. Like, I'm hoping that the world wake up to what is happening here and stop fighting each other. God, I don't. Even in the US too, right? I don't even know what's going to happen here. There's a lot of job loss and all that stuff. So those type of chaos might be here too in the major city in the US. But yeah, finger crossed. Nobody's going to be harmed. More of them going to be harmed. But I know that's a lot of like fear in the, what is it? like Iran, and the conflict in Iran and Israel as well. So perhaps that's kind of tied into, trying to elicit a war with Iran, right? Again, it's all tied in here. Um, Somebody is trying to stir something. Again, my mind is like conspiratory, right? It's like, it has to be connected in some way. Um, Perhaps they're trying to shake people out of um, their investment, right? Dare I say GameStop? I don't know. But anyway, people are going to think I'm crazy if I say that. But let me just refrain myself from that, and let's look at the reality. But yeah, thank you. Thank you for sharing, Giga. And hi, Jesus. Jesus. Appreciate you joining in. Emmanuel. All right, you came in at the right time. Everyone has to pick a side. Get crushed or get crushed. Yeah. Oh man. All right, so let's kind of bring it back to what is important. No, I'm not saying that. Shouldn't say that. A bit insensitive to say. Hey, Spurge, hey, I haven't seen you in a while. Thank you for joining. So let's switch gear here. I know my heart goes to everyone in London. Like I said, appreciate you. So don't feel bad for sharing the news here. All right, so let's switch gear. I know there's a lot of fear in the market. Like I said, it's been a couple of weeks now that the downtrend is here. If you look at the GME chart, everybody sees this, right? Everybody is expecting the bounce to happen. Will it? I don't know. Currently, I have deleveraging, should I say, my call option. So I'm down to 10. I used to have 17. Now I'm down to 10. I still have my short term, so I'm doing this pool man covered call thing, right? And so to try to, again, gain some exposure to the upside, more skewed to the upside, obviously. But the downside protection is still there, but not enough to not be an loss, right? But the idea is that you don't lose too much of your call value if you write a short term call option, covered call, so to speak, to kind of offset some of that loss. It's no avoiding it if the shares coming down or the price comes down a lot more, it's going to cause some havoc in my portfolio, in my trading account. Okay, so I still have my moon back. I coined it my moon back. My long term, that's in my Roth IRA, is gonna stay there forever until the end of time. So I'm not talking about that. I'm talking about my trading account here. So, just a cautious, people too. I know we all expecting a bounce here at some point, but that's why people are looking for the opportunity here. So this might be the opportunity to jump in again. This is the gap fill that I've been talking about, and it seems like very a lot of price action that happens in GME usually, surrounding the gap fill. If it gaps up, then it must come down to fill it. It seems, right? Within a couple of weeks or months. If you look at the hourly, so I want to point out this fear and greed index as well. So we're still in the fear territory here. Usually, what happens when it's fearful? What happens? You want to buy when it's fear, right? Buy when it's blood in the street, even though it's your own blood. I've been saying this all the time because, yes, some people think that it's a suicide mission over here by saying that, but there you go. I've been saying it over here as well. So again, it's not guaranteed that it's going to bounce. Obviously, we've been in a fear. Look, like we are fearful over here, we are fearful over here, we are fearful over here too. So just because you buy in at fear over here doesn't mean that it's going to drop. It's not going to drop down. It's just a barometer that I use to accumulate shares. Anytime I see red like this, I'm going to buy, Anytime I see red like this, I'm gonna buy into the fear, and this is how you make the upside. I guess like more percentage to the upside, but also you're risking as well as far as the price action goes. Again, price is psychological, you guys. So it's a matter of time. Is that people will know what this company is all about. So again, like Moran said in his live stream, not everyone knows about the book value of this company, the true value, right? I made a video about it as well, kind of explaining how Google doesn't give you the current book value yet, because they did not account for the $3 billion that we have in the bank yet through dilution, right? And of course, the term dilution itself, it's still a fearful factor that people are kind of like evaluating this company. Anyone who wants to jump in, actually, like, I got somebody in recently, and currently they're in the red right now, and I tried to explain it's tough, because when you see your portfolio in the red, you want to do something with it, which is sell, right? Because the fear is it's going to come back down to 17, 20, right? Or even $15. I even hear people would say that, right? Will it? I don't know. I don't know what's going to happen, but will it? Well, if the market crash, if the overall market is going to crash, and I've been saying it over here too, right? Before this, like if the market at large crash, it's going to cascade down with it, right? Again, fearful sell-off. People are just sell. I want it back, right? So I'm sure market makers going to take advantage of shorting this to oblivion as well. But for people who've been here for a while, we know the actual value of the company. And again, this is why the phrase, fundamental doesn't matter if there's so much fear in the market. And then this is where billionaire makes, or millionaires is made too, because billionaire has some cash on hand, right? This is why it's so important to have some cash on hand, you guys, to sit on your hands and feet and not doing anything. And then when people are telling you Ryan Cohen doesn't do anything, why don't he use that money already? Why? Why would we be using money to buy something that is overinflated to oblivion, right? We don't know what evaluation means anymore, right? We evaluate company based on how much debt they have, and the more debt they have, it seems like the better, right? This is the sentiment for most people out there. But again, we've been doing this for decades and decades and decades of overinflating the balance sheets using debt. And so when you have companies that doesn't have any debt, people seems to like, that's nothing. Why are you holding cash? That's terrible. Like, why are you cutting down stores? You should be expanding like crazy, like us over there 2 years ago, right? So this leadership has been doing the right thing, the right way, the right time. And right now, all we have to do is just sit and being pretty. That's it, just sitting and being pretty. And then we'll hope that after the world's gone mad, crazy, everybody's fighting each other, we're gonna, when everything recovers, so of course, if World War III happens, the market's gonna come down anyway. Or, if you're in Lockheed Martin, I'm sure you probably, benefit from that too. I'm not in any of those stocks. So, people think about oil, for example, right? If there's conflict in the Middle East or whatever, oil price going to go up, and then everything else going to come down. So that is inflationary as well. So we're in a tough spot here, right? The Fed's going to have to do something, right? But when they do it, it's going to be drastic, as history has ever told you about the bond market. So hold on, let me finish my thoughts here first, though, before I go there. I know I have tendency to ramble on about nothing at all, so thank you guys for joining. If you have any questions, to steer me from some other things, or my own rant over here. So, um, anyway, so as I was saying, debt is not always good, but debt is not always bad either. It's a balance, right? Too much debt is bad because then you can't expand. Some debt, small debt, could expand, your balance sheet. However, there are a time for that. Okay, right now, the time is to stay put, not doing anything. Right, cut down as much as you can, just like Larry Chain was saying in his live stream. Right, a great CEO would or who has money. Anytime you have capital in your company, you act like you don't spend it, right? Act like you don't have the capital, because when the time that you need the capital to take advantage of something, you will have the capital to do that immediately. You don't have to go to the bank. You don't have to go to the shareholder to dilute more, right? Because now the opportunity, we already took the opportunity to raise money over here, right? So there's no, it's risk free. Dare I say, it's risk free for the company. I'm not talking about the stock price here. Okay, so please distinguish the two. It's totally it makes so much sense that he did it up here. I mean, sorry, over here, right? Because he took the opportunity to raise money to take advantage of the downturn, right? He did it over here too, right? And then right? And then people are like, oh, it's gonna kill the squeeze. No, we've been buying this company for 3 years, right? So technically, you should be, if you're a diehard, quote unquote, long-term investor, you should be happy because now you have more value added to your shares. How could that be? Dilution is bad, right? Well, in this case, it's not, because the demand is so high that people are willing to buy it at $28. Yes, overvalue at the time, right? Quote unquote, if you look at the balance sheets and all that stuff. But people are stampeding to buy it at $28. So what gives? Was it retail? Was it institution? Who knows, right? All I know is that they bought it at, on average, right? The second dilution, $28. So GameStop got value out of it. So with that, it get added on to your shareholder equity. Okay, so that's why people who bought it at $10 technically got the company for free. For free over here. If you bought over here, you got the company for free, because everything you bought over here is turning into cash right now, or shareholder equity, right? Not everything, but dare I say, 90% of it is cash. So that's the assessment that I have for this company. Now, at this price point, I always said, right? It's almost like you're buying it at this here before we had the dilution, before we raised those $3 billion. So the equity versus price to equity, so to speak, it's still at 50%, okay? 50%. So if you buy it at this price right here, you get 50% of equity. That's pretty good, because $20 means that minus book value. So you got the company at $10 or $11 a share. If it ever comes down even more, then you got at a cheaper price to discount. Again, cash is important, you guys. Like, I don't know why people think that cash is not important at all, especially in this environment. As you know, people are fleeing to bond. Okay, bond market. Look at the bond market. I mean, come on, let's go. Let's go to the bond market and look at it together. Huh? Okay, so I know, like, everybody is looking at this right now and see the 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 destruction of yield over here. And nobody like bat an eye, right? I'm sure the pundits out there in on news media is telling you, oh, this time is different. I just watched some guy who said Nvidia is gonna go higher, right? Because the rate is gonna be lower and all that stuff. Yes, sometimes when people have that news, immediately they think that, oh, now money is cheaper, therefore let's go buy Nvidia again to try to capture that momentum. I don't know. I feel like this is a combination of what happened 2 years ago when we were printing money, right? Because remember, the Fed raised the rate about 18 months ago, okay? So it takes some times for those to destroy, it takes some time for the market to realize that. So the effect of rate hike had not had taken effect on the stock market yet, right? If you were to read, what's happening over here in the SPY, let's go back to the SPY here. I promise you I have a point here. Again, you guys, I'm sorry. I'm just thinking out loud here. I'm not knowledgeable at all, so please don't kill me. Sorry, should say that. Please don't beat me up, so to speak. Okay, so there's a lot of fear, right? And so when you look at last year, when the Fed raising the rate, right here, right? When did they start raising the rate? I think it was around here somewhere. The market keep going up. And you really want to see that on the bonds, right? I think the junk bond, was that the one that I was looking at? But anyway, my point is that all of these are as a result of the Fed rate. Fed has not cutting rates or anything. They were expecting rate cuts all the time. Oh, if the Fed cuts rate, we're going to be fine. And all of that gain comes from inflation, right? From years, like from the pandemic, they spend. And I'm sure, yes, the government might want to spend more, $1 trillion more. But at some point, it's going to be, it's going to come down, right? Again, I don't know. It's speculation here. Will it come down to 400? That's going to be a steep fall. Cause a lot of fear in the market as well. So will that be the opportunity for, Ryan Cohen to use some of that fund to, I don't know, acquire something, do something, right? But until then, we're not going to do a thing until we understand where the market is going. What direction is it going to go? So in the meantime, everyone is fleeing to Treasury bond. Why are they doing that? If the market is doing well, if companies are making record earnings, they're not, right? So let's look at Intel real quick, because this is related to that as well. So the whole perspective here is that if banks knows something is going to crash, right? They usually go to the Treasury bond and be happy with any kind of rate, like even 4% right here, 3.7%. They're happy with this rate, right? Because they know that in the market, it's too much risk. That even this percentage is sufficient, because at least you have the principal. So that's the idea, okay? And this, if people are fleeing there again this whole week, this yield is going to come down even even the 2-year. The 2-year is going to come down. And this short-term treasury bond is going to come down, right? So eventually, instead of having 5%, you get 2%, right? Or lower than the 2-year. When that happens, usually people will flock in back to the, 10 years, 20 years, and the 30 years. That's why the TLT went up in value, like 3% on Friday. Like out of nowhere, right? Out of nowhere. So if you look at the TLT, like I said, I have so right there, like bond doesn't move this quickly, you guys. So there's a break there. I have a position in here. I'm gonna try to gain some more in my trading account. Right now it's all in cash. I'm kind of waiting on the sideline. I don't know if I want to do the bond right now or wait for the dip on GME. But my my strategy now is going to a flight of safety a little bit here for my trading account. So but also I want to expose my trading account to my to GME as well, just for a quick, a quick trade here. But as far as my shares, I still have quite a bit left. So in my trading account, I used to have half the amount. So now I trim off some risk, like I said. So that's why I wanted to kind of put it into the treasury bond here to try to capture some of this value created. Now my speculation here, I think Ryan Cohen, if you're listening, please get some get some TLT too. Because it seems like it's poised to go up in price. I know I've been drawing this head and shoulder here, so the price target, it could be over here. But if that happens, the market's gonna crash. Equity's not going to do well, including GameStop. You guys, I know there's a lot of negative beta point of view here that might not be playing out at the moment. But if you look, let's go back to GME real quick here. Look at this, okay? So my thought is that if there's a lot of fear, this is going to escalate even more. As you know, the downside, look at the volume though. Mind you, nobody's selling here. Nobody's selling here, right? Because look at the volume. If this price really people are selling, then it should be higher volume than that. So that's a dead giveaway for me, right? That retail has not left this at all. And that's why I don't believe that, somehow retail is selling into this. I really think it was, whoever, market maker, swap data and all that stuff. Mind you, we're still in fear territory here, right? And so it could even dip down even lower. But if it ever curls back over here, you see how this is like curling back? It might be momentum the other way too. So again, just watch out for that. But even if they come back down to 17 or 18 here, the price interaction, if you look back to the left over here, you could see a lot of price interaction here. Right? So that could be a powerful support right there. Again, just loosely over here. And $10 now, if it ever go back to 10, obviously that could be possible as well. Look out, right? Like I said, $10, that means you're buying into cash. So that would be a steep drop right there. Would cause some heart attack over here. But to me, again, I have my long-term bag. Will I add more? Of course, I'm gonna look for this support right here. Around 20, I'm kind of scaling back in again, but I'm gonna wait for the for the team over here. Okay. Again, on my trading account. So we'll see how that will go. Of course, that's leading up to the earnings months over here. It's hard to say. Perhaps they don't want GME to be high over here while the earnings report is going to be positive, right? So, we're doing great though. Like as far as the company goes, we have this now. Sorry. We have the trading card, and Moran's did a video on some changes that is being done. If you want to click on one of them, they've changed something over here. So they're telling you market price and all that stuff. So that's a good point of reference, right? That you get below market price for these type of cards. If you're a collector, obviously this could be a good value created for you. As a pro member, you get a lesser value, even more, meaning discounted price. So these are, member building type of customer acquisition type of thing. So yes, we want new customer to come in, and whoever's want to collect this type of thing will be able to do so with GME. And on top of that, they also sell, trading card as well. So you get a pack, you get a Pokemon cards, and people are going crazy with this. Look at this, and they're doing stuff like this where, to entice people to, hey, if you have this card, you could get $25,000, but you have to get it graded too. So, is this worth $25,000? I don't know. It's a collectible of some sort. So I'm sure someone who have so much money to spare, or try to gain some value later on. If you're a billionaire, for example, you might want to collect these type of things. Wait 10 years down the line, maybe somebody would buy it for $50,000. Who knows? So that's the whole point. Again, this collectible gives people the opportunity to turn their collection into cash. Okay, so at hard times, recessionary or whatever, when people are losing jobs and whatever, these are usually provide the market for people to turn it into cash. And people might be willing to sell at a below market price just to get some cash. And this is how GameStop will benefit from it, because they could turn around and sell it to somebody else who might want it. So it creates a market of buying and selling, just like NFT of some sort, right? So let's say, 10 years from now, Jamie is unable to sell one of this card, and that card might turn into a more valuable card later on due to inflations and all that stuff, right? Who knows? Again, speculation here. But again, at every turn, GME is the middleman for this type of market. Trading card market. Let's see, how much is the total market cap of addressable market for trading card? Does anyone know? I think, how much is trading? Okay, so according to survey, okay, online market auction. Okay, 1 million active trading cards. Okay, I think this is. Okay, look, brace yourself. Nearly 38 million sport cards sold on eBay. So, okay, 30 million, not $30 million, 30 million sport card being exchanged hand on eBay last year. So the year 2023. So yes, this is a viable market. How much will be um, will be traded? I mean, again, this is the value that GME is offering right now, and perhaps maybe later on they're gonna auction it out, or have the ability for people to auction it on the website itself. So will that be fun? Yeah, let's create some interaction there, right? And then in the meantime, you get the ability to sell those pack of cards to people as well. If you want to buy in to get some cards in order to trade in, that's also a value created, a value creation for the company to, beat those expectation for revenue count. Remember, when people evaluate the GME, they only think about used video game. No one knows that GME is doing this right now. Only a collect few here, diehard fans or fans of collectibles, right? And again, like the only place that you could do it on a trading card is used to be anyway, was on eBay. So now you have a different market, a different place other than eBay to get your trading card graded or sold or bought, right? So yeah, that's a good marketplace to be, a good place to be. So it may increase to hundreds of billions of dollars here. Okay, let me see. So global sport trading market value at currently is under $1 billion, 635 million right now. Oh, sorry, 2 years ago. Expected growth to reach, sorry. Okay, 10 years from now. 10 years from this, it's going to go higher. Wait, are these like not even? Oh, memorabilia. So by the year 2032, which is 8 years from now, the total market cap could be increased in value to the billions. Okay, that's probably due to inflation too. Who knows? Anyway, so I'm rambling on here, but my point is it has some value in here. But it remains to be seen, obviously, how much money they're actually going to make out of this. It's a fun thing to track for sure, right? And then you have, ways to buy and sell stuff, refurbish and whatnot, membership, and then you have digital store here if you want to download your games through all of these. Like, the fact that people are like, oh, I can't buy anything from GameStop digitally. Well, you could buy it from GameStop. Why would you want to buy at GameStop? Well, you get 5% off, right? I mean, that's a pretty good value there. If not, then buy it from somewhere else, right? Buy it from Steam, buy it from, directly from the website if you wanted to. So it's okay. We have other stuff to sell. We don't care about the digital download crowd. But anyway, so let's talk about Intel. I know it was in my thumbnail, so I didn't even mention it. Okay, so let's bring it in. So what I'm talking about here is the fact that Intel has been, in my opinion, overvalued for a long, long time. And this is a lesson learned for, companies out there who thinks that they could just load off debts and grow forever until the end of time. You cannot do that. Like, yes, that is good, like I said. But if it's over leveraged to the point where you can't even pay your interest, that is going to be a problem later on down the road, right? And so Intel was one of the biggest company, you could ever imagine having, right? People used to be proud owning Intel. If you look at the price chart, you could see it right there. Is anybody crying about how Intel is a meme stock? Like a terrible company to own? Like, no? Okay, let me see. Weekly. Let's do monthly. So the company has been in decline since 2021, right? Because this is the depth. Back then over here. See, look, dot-com bubble, right? This is the vibe of dot-com bubble. So, everything have to do with website, computer went crazy. So now you have companies that are not doing well because I'm sure they were able to kind of leverage their asset over here, loading some debt and rinse and repeat over here, right? So 2012, let's go back to 2010, and I'm curious to see how much debt did they have then versus now. So let's go back. I don't know how far I could go back. Oh man, I can't. Boo-hoo. Oh, wait. Actually, let me go back here. Maybe this would give me better reference. No, still. Unfortunately, I'm only gonna do... Okay, so let's go back here. I bet I have a better one, but let's just go up here. So at the height of their price action here. So let's go 2020. The year 2020. Why were there a sudden huge surge of price action here? Let's see. $2020. Okay, so expenses right here, incomes right here. Interest expenses back then was $500 million. Okay? So that was at its height of its price action in terms of price. Okay. Ever since then, you could see that there are increases in some years they went down, some year they went up, but substantially, boom. Now it's $1 billion worth of cash or worth of interest payment on top of their debt. So I'm curious to see what is their debt structure like. So let's go there. And I'm sure it's probably, look at this. Goodwill value as well. Some sort of untangible asset that might not be worth that much, but it's being propped up into the asset there too. Okay. But, okay, so long-term debt right here, $48 billion. But what was it back in the year 2022, 2020? Okay, let's go to 2020. The debt was lower, $38 million. $1 billion, sorry. $36 billion back then. Okay, and this is at the height of its shares price being traded, So the point is that ever since then, they've been increasing their debt level by, okay, so 46 plus $36 billion. So $10 billion worth of debt being loaded onto the company balance sheets. Okay, so now we're at the ending of it where they were so confident that they could make those money back, and they keep adding on more debt, right? thinking that, yes, that is the way to go. If you want to expand your company, you use debt to expand the company. Okay. If you could do that using your asset. But what happened when you're unable to earn? At some point, even 2% revenue, look, they're actually increasing in revenue here, right? Well, from from the last trailing 12, but look at this decrease in revenue, right? Time and time and time again, right? So, did they increase in net income? No, I don't think so. Look at the net income, right? This is the result of over leveraging on debt in order to try to expand. And when the economy is not doing well, again, just a slight downturn here. We're not even experiencing a collapse of like Great Depression or anything like that. It takes tens of billions of dollars, in order for you to make pennies on it. So again, like every company is like this, especially big caps company out there. They are relying on debt in order to grow. Okay? And who lend them the debt? Look at this. It used to be $24 billion. Now it's under $1 billion. Right? Imagine if they don't have those debts, right? Imagine if they just, you know what, we have enough debt. Let's try some other things. Yes, income is coming down. But if you were to add on all of the interest payment, I'm sure the company would make close to like $2 billion currently, right? Yes, it downturned from, whatever. But again, me just speculation here, right? Look, $1 billion loss to that. $1 billion a year. This is trailing 12, by the way. So if you were to add 1 billion, that's $2 billion right there. Right? And they're just chipping it away. $500 million at a time, $500 million at a time. Right? While that $500 million could have been should have been at least added on to the retained earning. I wonder what the retained earnings for this one is. Okay, so debt to equity is not too bad, you guys. So, however, they just don't have the revenue for it. Decline in revenue. Yeah. What was I looking at? Okay. Profit margin, okay, 7%, still higher than Gamestop, I mean, for sure, yes. It's a technology company, it's a chip making company, obviously. They should make more. Of course, they have to charge people more too, right? Inflationary. But if people don't have money to spend, even big companies out there, they're not spending. So, job cuts and all that stuff. Yep, look at this. Almond Z score is under 3, which means a risk of bankruptcy here is looming. Right? Yeah. So the point is that is not the answer to growth, you guys. Like, again, people are being kind of like anyone who analyzing any companies out there, they would tell you, hey, that is good, that is good. You're being told that is good all the time. And it's not the case. When the economy is not doing well, that is going to be the crippling factor for your company. Even though you should be like hundreds of billions of dollars here, market cap. It used to be, right? Now it's falling. So big cap is in trouble, you guys. Even Amazon too. If you look at Amazon's earning and all that stuff, you would see. And this is why you see all the institutions are fleeing to bond. There's a cop car. I don't know what's happening. Oh, scary time, you guys. We're living in a scary time. So, will it continue? I don't know. But yeah, flight to safety is here. Understand that and protect yourself. You know, protect your wealth, protect. Yeah, sorry. I'm just trying to listen to the. I wonder what's happening here. All right. So what am I trying to say to you here? Is that the debt is gonna come due. And when the debt come due for this company that over leveraged their asset in order to get debt, in order to get some growth, I think that's just facade, right? Eventually, you're gonna have to run into this type of thing where you have to cut the dividends, right? Where you have to cut staff, where you have to cut so much and even load more debt. I'm sure they're gonna try to leverage more debt onto this particular balance sheet. And who's going to suffer the most? Shareholder equity. Okay? Well, shareholders, a common stock shareholder usually. Now, the people that promote, this type of company usually are the debt holder themselves. Who hold those debts usually? Banks, senior note holders, private equity. Who knows, right? So this is probably going to be the distressed credit investor out there who's going to try to feast on the asset of this company and try to squeeze some more out. So, man, nobody say anything about how terrible this company is. No, the worst day in 50 years. Okay. So is it just GameStop or it's the whole economy being going to the toilet over here because we've been indebted, everybody is broke, everybody doesn't have anything to spend anymore. And so yeah, but GameStop should spend their money when everybody is in debt. Nah, let's not spend, let's just sit tight and be pretty. That's what GameStop is in a better position than any of these large cap company out there. Yes, share price might suffer due to the sell-off, due to the fear. And this is why buying, not financial advice, obviously, buying into the fear is usually what you're supposed to be doing. If you're not over leveraging yourself and you don't need the money at any point in time, you should not be fearful at all. And this is what I'm preparing for, right? I've been preparing for this type of market for a long time. Okay. And I'm sure Ryan Cohen is preparing for that as well. Because if you have cash during the crash, you are going to be the king. Remember, cash is king at some point. In a recession or Great Depression, if you have cash, you're going to be a trillionaire at some point. Of course, if you time it right, right? If you don't need to sell your GME share for anything in your life, you're going to be fine. But if you're over leveraged, you're going to have to be forced to sell your shares, at whatever price, right? Again, this is why panicking ensues because they need the money over here. They need the money over here. They need the money over here. Okay. Same thing with institution, right? Whoever's holding this stock is holding the short position, right? They're gonna need the money at some point. When institution who short this stock need the money, they have to buy the stock back at any price. The same. It goes the other way too, right? So just sit tight and let them solve. Let them try to do all of the shenanigans to short this stock. Look at this. Like there's no volume. There's no selling volume. Yes, there's some buying volume here. But again, retail do not move this market. Institution that has to go long because number one, they need shares for whatever reason. Or whoever wants to get in on this opportunity, that is, this company. Institution will have to buy at some point, right? But we have to have the balance sheet for it too. So let's be realistic about that, and yeah, just wait and see. Earnings is in a couple of weeks here, right there. so we'll see. There's no date yet, but for now it's the 4th of September. Okay, you guys, I think I'm thirsty or something. I'm kind of like out, babbling for too long right now. So, all right, guys, thank you for joining. I know I'm not making much sense here, but if you could take away from this and you're still here, market isn't fear. Deleveraging yourself if you have to. Protect yourself. If you're a long-term investor in this company, opportunity to buy the dip is here. Again, I'm waiting for the gap fill over here. Again, establish a position. Right. This is what I wanted to say. I have 10 call right now at $20 strike price. My average cost for that one was $5 per share. So if I want to exercise at 20, which possibly I could do, my cost average for this particular option would be, no, not the option contract, but if I were to exercise this one right here, I would, my cost average would be $25 a share. Will I do that? Not really, not right now, but I have the funds to do that for now. I mean, for 2 contracts to be exercised. I'm waiting to see if it falls down. I might trim some of position out. Okay, so instead of 10 option, I might only do 5, but kind of reducing the risk here. And then take some of that money in order to exercise that call if it's going above $20 within this week. I have to do it in this week because if I'm not, I might not be able to exercise that call because it won't be in the money anymore, right? So that's the whole point. Why would I want to exercise that call even though my cost average for that particular contract would be $25? I want shares, right? When I have shares, I don't have to worry about the time expiration at all. And what I could do as well is use that shares to write a covered call on the leap one. So providing me with some cash, even more, to buy at the dip even more. So, yeah, so technically I'm not really losing on the downturn, but it would provide me some liquidity in order to scoop some more shares if it ever dropped down to $10, right? I mean, again, strategy here. Logically. But anyway, all right, you guys, I'm gonna sign off. I am kind of hungry right now, so hopefully everyone stay safe out there. And if you're staying outside, please be careful because you hold Gamestop, so you're gonna be a billionaire sometime in the future. So be careful. But anyway,